financial sector is among the top performers. Just heard Mike talking about it this year, reflecting expectations. The Fed going to kick off an easing cycle today. Joining us now with what he thinks of the banks, Jason Goldberg, Barclays, senior equity analyst. Already in anticipation of this, this year, financials have done well.
I mean, they certainly have. I think it's, expectations that the economy is continuing to grow, and the Fed cut could help that continue. And also this whole theme of kind of regulatory reduction. After 15 years of regulatory environment for banks getting worse and worse and worse, you're starting to see some easing on that front.
Is it just a blanket statement that an easing cycle from the Fed is going to benefit the money center banks?
I mean, at the end of the day, right, banks are a reflection of the economy. So loan growth has been a bit more...
So it's not because of the yield curve or interest rates or deposits or
I would say it's all of the above, right? So
trading, M&A, all that stuff.
All the above, right? The Fed lowering rates helps a lot of things. It helps spur loan growth. You've seen it pick up in capital markets activity to the extent financing costs come down. That can certainly help the M&A and IPO activity. Lower rates could mean more increased mortgage refinance activity. Lower rates, helps the value of banks' book value, given unrealized losses tend to decline. So there's a whole host of benefits that helps the lower rates. But at the end of the day, to the extent it spurs economic activity, banks tend to benefit from that.
So do you have favorites, and do you have some that you don't like?
Yeah, I think in this backdrop, I think a bias towards the bigger banks as they're benefiting from this kind of resurgence of capital markets activity, and at the same time, as well as that regulatory reduction theme we talked about earlier. So whether it's Citigroup, Bank of America, J.P. Morgan, Goldman Sachs, Morgan Stanley should really all benefit from a more conducive economic backdrop.
They're at highs, many of them, at this point, right? Is there, how would you gauge the difference between some of the names that you just mentioned? Is J.P. Morgan always a cream of the crop in terms of book value? It always seems like it trades higher than anyone else. Yeah,
they're certainly the best athlete in the group, consistently putting up, over the last several years, a 20% plus kind of return on tangible common equity. So yeah, they do. It's
kind of your favorite? Or?
No, they're just kind of the best athlete. I think where valuations are, I'd say Citigroup trading it closer to tangible book value is maybe a little bit more attractive. Bank of America has kind of lagged the other money center banks. There's probably room for them to kind of catch up over the next couple of years.
Citi's back to 100, so that's 10. After the 1 for 10 reverse split, right?
I think 560 is probably the all-time high, so a ways to go.
$560, yeah,
split
exactly.
Adjusted,
Factor 100, yeah, split adjusted. All right, Jason, thank you.
Thank you.
Okay.